This is our Forex blog for March 7th, 2012. And like we do most days, we want to buy the strongest currencies versus the weakest and sell the weakest versus the strong. Some days are trend days and other days are counter trend days. And of course, you have days with low volatility, some days with high, and some days where the market just kind of chops around either with high volatility or chops around with low volatility. Those are all the different types of days. You always want to look and try to focus on trading with the currencies with the strongest real-time momentum. So you can see the dollar up here. The histogram on the top measures the real-time direction the dollar is going. This is made up of 5 of our best statistical tools. 3 of them measure direction. 2 of them measure the intensity of the direction. And usually whenever you see a lot of weakness like this followed by significantly less strength, because markets don't go up, typically they'll go up for 30 minutes, an hour and a half, sometimes up to 3 hours, but then they'll have a pullback. It might be a 15 to 30 minute pullback or, 1.5 hour pullback, but nonetheless, compare the upwards momentum to the downwards momentum, and usually if you see a move that's at and above the 80 level, followed by a pullback with 1/2 or less, in this case 1/3 or 1/4 the strength, it's very likely to resume that weakness. Now underneath that we have the daily, weekly, and monthly. So if you see a currency like the dollar today that looks like it's going to be getting weak, but it's very strong weekly and monthly trend is up, then you still want to trade with the direction of the down move, but it's less likely to go down for more maybe than a 30 minutes to an hour and a half. It's less likely to have one of these 3, 4, 5 hour direct big moves when it's against the counter trend move here. So you basically at that same time want to find a currency that's strongest. At 1 o'clock, what was the strongest one? That would be the New Zealand. This one, unfortunately, also has a weekly and monthly trend that is down right now. However, about a week and a half ago, the New Zealand was one of the strongest ones, and it's had a pretty severe pullback, so it's likely to resume its uptrend. That's where, trading every day and knowing which currencies are or was strong the week before or weak the week before, you can be prepared to trade, when you see strength again, because it's very likely to resume into that direction. So we're going to look for New Zealand dollar buy around 1. So here's this currency. This one's going up. You have the 50-day moving average right here. It's acting as resistance. You can see it's been going up with quite a bit of strength. Here's our hourly moving average, and here's our upper containment bands, which most of the time contain price. As you can see, contained it yesterday at the low, contained it here at the high. So if you are watching this chart today, you might just make the smart decision to not even take this trade because your profit target is right around here at 81. If you buy this breakout right here at 1 o'clock and it breaks above this 50-day moving average right here, you have a 10-pip profit target. So if you're risking 10 pips on the trade, you probably do not want to take that trade. Now, the second one, once it pulled back here, if it starts going back up here at 69, you have 86 to 90 profit target, and that does make sense. So always use the risk versus reward to find high probability trades. Also, if you see a currency that's strong earlier in the day, usually the first time it touches the hourly, it's going to find support. This is a wonderful place to buy. And this also happens to be our Elliott two-wave pullback system. You draw your fibs on the first pullback wave. Usually somewhere between the first and second fib target, it's going to find support. Anytime you have other areas of support underneath there as well, like the hourly moving average, the half number, the monthly pivots right there, all within 5 or 6 pips or less. Excellent place to go long. Or if you wanted to kind of wait and see what happens, when it breaks out the second time right here, you're in at 70. Notice it went up 30 pips. This is one of the main reasons why we teach so many different systems in our classes, so that traders can initially start to trade with a trend, but knowing it's near the upper containment band, might wait for a deeper pullback and go long here. You also have very likely a Fibonacci pullback from the low to the high today. Notice it's between a 38 and 50% pullback. 50% usually strong trends don't go below it, so that's another added support area there. And it pretty much found support right at the hourly, 38% Fibonacci, and it's also the Elliott two-wave. It's the Fibonacci profit target of this wave right here. There's a lot of reasons to buy that. Looking at other parts of the day, we also have a strong Australian, look, extreme strength followed by a pullback with less momentum. Usually that move continues. So if you look at the Australian dollar as well, this one is a little bit higher odds trade in my opinion because it's not up near the upper containment band already. So it has the potential, if the trend continues, to go for right here when it breaks out at 53 all the way up to 06. It's got a lot of room to run. So let's say you bought this right here. Well, it went up about 8 or 9 pips, came back down, stopped you out. Usually I'm a little bit more cautious in buying these the next time. I might not buy it right here at the hourly, but if it goes up, find support right here and breaks out, I might go long right here. And you can see I would have had a small loss there. And then it ultimately starts back up again. You go long here at 62. At that point, you also have the Fibonacci profit target of this wave to look at as a profit. And our trailing stop got you out right there, right near our monthly S1 pivot level as well. So let's say you get out of this at 80 and you bought this last one here at 62. You might have netted 15, 16 pips, lost 5 pips on the one before. You know, you're left with a profit. There's not a whole lot of really good patterns on this except for right here. A lot of strength in the direction of the daily, weekly, monthly trend. The pullback has almost no weakness. That's a trend that's even much more likely to continue than the previous weakness was before because all the time frames line up. So what was the weakest one coming up to 9 o'clock that gave you hopefully an opposite pattern? The euro, very weak for many hours, had about a 1 hour pullback. It's kind of losing strength right there at 9. I would consider the Australian, however, it was showing a lot of strength. I would personally rule that one out. So really, the only one that I see that I personally, if using the currency meter at 9, this is what it would look like. Right? A lot of weakness, hour pullback, a lot of strength, very little weakness. And especially, you know, as you're watching this, all right, the dollar's slightly going strong and the euro is clearly losing its strength right here, and it had far less momentum to the upside than it did for the last 3 hours that were down, and you know, with quite a bit more intensity to the downside. You want to at 9 o'clock look to sell the euro dollar. So here is, let's scroll this one back as well so you can look at it. This currency was above the hourly most of the day, and that's usually a sign that you want to focus on buys. But right before 8, it broke down from above the hourly to below, and usually that's a sign that the market's going to try to go lower. It went back up to the hourly and it found resistance at the hourly. This is called a support resistance retest. So that is another reason to be looking to sell this area. And coming up to 9 o'clock, basically you just want to look to sell when it breaks down underneath that low, and your minimum profit target might be this. You have the previous day's low down here, of course, at 31.03. It may not go underneath there. So if it does go underneath there, the Fibonacci profit target of this level is something to look for. So we're not in yet. As I scroll forward and kind of simulate this trading, all right, you'd be short there. Your stop would be just a few pips above the high. I like to keep it maybe 1 or 2 pips. 34. We're short here at around 23. We're risking 12, 13 pips. Okay, the market starts to drop, and this is what oftentimes happens. Anytime it explodes your way like this, it's usually going to continue. Our profit target's only 7 pips below there. It's very likely to find support there or stall. So I will tend to exit half my trade if that happens, but we're going to watch this. At this point, you would already move your stop down to break even, right? It's moved enough in your way. It's not likely to reverse back up, and if it does, you want to be out of this trade at break even. There's no risk in this trade right now, other than giving back the profits you have. All right, notice it did hit the support level, and watching this real time, I would have exited half there. It also lost a little bit of momentum. I'm going to move my other stop down right above here, because especially if it's my first trade of the day, I want to maximize and get as many pips as possible. All right, there it goes. It came down and hit my fib target here. We have the whole number. If I wasn't out of the first half, I definitely would be here. I'm going to move my stop down a little bit more, maybe above 10 right here, so we lock in 10 or 12 pips on the second half. And there I'm out, around 12. So I have maybe a 10 pip profit on the second half, and maybe 18 to 20 on the first half, so netting about 15 pips. Now, I oftentimes use, and mostly use actually, the range bars. This is a 6 pips per bar chart for the euro. Notice, you can see a lot farther back. If I hit the minus key, I can zoom out here. Notice this is also the 38% retracement right here. And so anytime a trend is this strong to the downside, comes back up and can't really get above the 38%, if you were trading this, you might actually have even went short right here. Notice where our trailing stop got you out. You would have been in that trade a little bit earlier. And a lot of times when price breaks down underneath the previous day's low, you have a big sell-off. So when I get a pullback like this and a little sideways rectangle pattern chop on the range bar, I will go short right here. The nice thing about range bars is you're risking less pips. You have 6 pips per bar, so I have a risk of 6 pips plus 1 pip padding plus the spread. You're almost always under 10 pips. And in this case, it came back down underneath the previous day's low, came back above it. I usually get out of my trade right here because rather than let my stop get out. False breakouts, when the market goes underneath any kind of support area by less than 15 pips and then immediately shoots back above it, you're likely to get a big move like this. So it also very likely was a news economic release at that point to cause it to move up so much. You should always be aware of when those are. Go to Forex Factory or use our study called FX News.